Welcome back, and welcome to Forex Minions. Today, our topic of discussion is pullbacks and valid inducement. We will learn how to identify valid inducement, or fake inducement. To understand the validity of inducement, first we have to understand that what is pullback. Basically, a pullback occurs when the price takes break or pauses and corrects itself or goes against trend in the market. Many of you maybe call it as correction. Notice that it is a temporary dip in a generally upward trending market. Just for understand, note the schematic diagram of pullback. These are pullback in bullish market. Pullback can be very short or extended depending on market conditions. Secondly, these are pullback in bearish market. Pullbacks can be very minor or in form of deeper correction as you can see here. Now, question is, which pullback is valid? Because every pullback is not valid. So, first we need to understand this. To check validity, there is only one factor for confirmation. This most important factor is liquidity sweep. Now, what is liquidity sweep? Let's discuss it. So, what is liquidity sweep? Liquidity sweeps are typically used by institutional traders and banks, which is known as smart money, to execute their large orders. But why market need liquidity sweep? To get this idea, assume if you want to sell 10,000 of orders. To sell such huge amount of orders, you need a huge buyer pool or interested buyers to whom you can sell your orders. By this concept, now you can understand that smart money, big institutions, and banks want bigger liquidity pool, or you can say buyer or sellers with open interest to buy from them or to sell them. Once bank will sell you on higher price, or buy from you on lower price, they will not allow you to get that better price again. That's why liquidity sweeping move is very quick and efficient, and it reflects the footprint of smart money executions. Now, see this schematic diagram. Market started ranging between these high and low level. Now, breakout traders will try to sell or buy above and below this range. Assume there are 100 buy stops orders, and on sell side, sell stops order are 10,000, which is actually 100 times more than buy side. So, what banks or smart money will do? They will try to target bigger liquidity pool side to execute their large orders. So, market will move something like this. See, market took sell side liquidity, trapped them and moved in other direction. This is known as low sweep or sell side sweep. Similarly, this schematic diagram shows the buy side sweep as market orders are higher on buy side. Now, you understand that why liquidity sweep happens and which side market will target first. Let's understand this example by candlesticks diagram. For candlesticks based understanding, let's map out simple diagram. See, this is market ranging. This is market opening price. This is market closing price. When we project the scheme in shape of candlestick, this form candle body. And what about these high and low level which market traded? When we project this high and low on candlestick, this will form or reflects the wicks. Now, breakout traders piling up their orders in form of buy stops and sell stops. Projecting these orders on candlesticks will looks like this. Understand? Actually, we projected this schematic diagram in form of candlesticks. Let's see how market will act now. Price will sweep this lower side and move higher as sell stops liquidity pool is larger than buyer side. Now, if we project this bullish or liquidity sweeping move in form of candle, here. This open to low is wick. And open to this close is body of candle. And high to close is this upper wick. Now, you understand that how liquidity sweep looks like in form of candlesticks shape. We will use notation of X, cross, to mark the liquidity sweep. Now, you will be able to identify valid pullback, which is first condition for valid inducement. Let's move to next slide. When price take out, sweep, the previous candle low or high, it is called valid pullback. In bullish market pullback, the low of the highest candle must be broken, liquidity sweep, To validate pullback. In bearish market pullback, the high of the lowest candle must be broken, liquidity sweep, to validate pullback. For example, in bullish market, liquidity sweep on low side will look like this, and for bearish market, these candle reflects the high side liquidity sweep. Now, what is second rule? Candle closing, I mean body base sweep or liquidity sweep, it's mean wick base sweeping, both are valid rules for pullback. See this example. Body closing below previous low is also a valid pullback, and same goes for this side. Now, keep in mind that it is not necessary that next candle must close or break the high or low of the sweeping candle in bearish or bullish pullback respectively. See these examples. The next candle, this one's, either break high of this previous candle or not. Both conditions are okay for pullbacks. Now, let's see more examples of it. To check and analyze pullback with candlesticks diagram, we consider a bearish market. For candle closing rule, the high of the previous candle must be broke by next new candle. Let's see this example. Here, first we have to mark lowest candle, which is candle number 1. Okay. Now, note that second candle broke this candle high here. So both rules are fulfilled. Hence, this pullback is valid. Next example. Here, first we have to mark lowest candle, which is candle number 3. Got it? Now, note that 4 number candle broke this candle high here. So both rules are fulfilled. Hence, this pullback is valid. Let's move on to another example. Here, first we have to mark lowest candle, which is candle number 5. Got it? Now, mark the high of this lowest candle, which is here. This line. Note next 3 bullish candles, 6, 7 and 8 could not break this lowest candle's high. So, this is not valid pullback. Let's move on to another example. Here, A is our lowest candle, and candle B broke its high. So this is valid pullback. But, what about this pullback? Is it valid pullback or not? Here, some traders will mark this candle C as a lowest candle, and they will look for its high to be broken. And they will mark it as invalid pullback. But, note that, C is not our lowest candle. Here lowest candle is candle D. And next candle taken out its high. So this is also valid pullback. I hope now you can identify a valid pullback easily, keeping these rules in mind. Let's move to bullish pullback examples. Now, for candle closing rule for bullish market, the low of the previous highest candle must be broke by next new candle. Let's see this example. Here, first we have to mark highest candle, which is candle number 1. Okay. Now, note that second candle broke this candle low here. So both rules are fulfilled. Hence, this pullback is valid. Next example. Here, first we have to mark highest candle, which is candle number 3. Got it? Now, note that 4 number candle broke this candle low here. So both rules are fulfilled. Hence, this pullback is valid. Let's move on to another example. Here, first we have to mark highest candle, which is candle number 5. Got it? Now, mark the low of this highest candle, which is here. This line. Note next 3 candles, 6, 7 and 8 could not break this candle's low. So, this is not valid pullback. Let's move on to another example. Here, A is our highest candle, and candle B broke its low. So this is valid pullback. But, what about this pullback? Is it valid pullback or not? Here, same trick as we discussed in previous slide. Retail traders will mark candle C as a highest candle, and they will mark it as invalid pullback, keeping in view its low. But, note that, C is not our highest candle. Here highest candle is candle D. And next candle taken out its high. So this is also valid pullback. I hope now you can identify a valid pullback easily, keeping these rules in mind. Let's move to bullish pullback examples. Now, how to mark valid inducement. We studied liquidity sweep and valid pullbacks just to understand and marking of valid inducement. Inducement is basically first valid pullback, I repeat, first valid pullback on left side of recent high or recent low. It is a trap before an area of point. Let's check this example. This is a candlestick chart. And this is first pullback. Now we have to identify that is this valid inducement or not. Let's start checking with our rules. First, let's find highest candle which is here. Now, mark this candle's low. Notice. Now see that next candles did not taken out the low of this candle. So this is not a valid pullback. Now, what about this pullback? Is this valid inducement or not? Let's start checking with our rules. First, let's find highest candle which is here. Now, mark this candle's low. Candle lows is taken and liquidity swept. So this is valid inducement. Let's check this another example. And this looks like an inducement. Is it? We have to identify that either it is valid inducement or not. Let's start checking with our rules. First, let's find highest candle which is here. Now, mark this candle's low. Here, see low of this highest candle. Now see that next candles did not taken out the low of this candle. So this is not a valid pullback. I hope after these examples annotation and with these rules, you can easily identify valid inducement. In next lecture, we will discuss inducement shift. Until next lesson, wish you good luck and happy trading.